Hello traders, this is Roger Scott. Last few days there's been a lot of talk about Italy, interest rates, and the stock market. There's a lot of fear in the environment and a lot of traders believe that the market is going to be going south. I want to show you something that I think is very important and something educational and something you can use that's very actionable. What you're seeing is the Vix Index. This is the volatility index. It's based on the S&P 500 at-the-money options. So this represents the fear level in the market. As a rule of thumb, what I usually look for is a level of 20. 20 tells me that there's fear, there's real global fear. If it's less than 20, I'm not too concerned. Right now, it looks like we're peaking out at about 18, which is kind of close. As you could see here, we peaked out a little earlier in the year. In June, we peaked out at around 19, and then in May, we peaked out at around 18 again, higher 18s. And at this time, it looks like we might have peaked out around 1838, which means we did not hit our 20 target, which means global tension is not as high as it appears right now within stocks. Also, if you look at the RSI, this is a 10-day RSI, it's extremely overbought. More overbought than we've seen in previous time periods, even over here. Now let's take a look at the bond market. Bonds rallied yesterday. Even though stocks closed lower, bonds rallied. The 10-year was oversold according to the RSI indicator. The Bollinger Band was penetrated. So it looks like we're moving back higher in the direction of the main trend. So bonds look like they're going to see a little upside, which is the opposite of what we would see because, bonds are inverse correlated to interest rates. So if interest rates are going higher, bonds are going lower. If bonds are going lower, interest rates are going higher. And it looks for now that bonds have bottomed out in the short term and are headed higher. And lastly, let's take a look at the S&P. The S&P 500 is at the 50-day moving average. It broke the high of the swing low that was made the day before. The RSI bottomed out near 30, and that's a 10-day RSI, and Bollinger Band, 10-period Bollinger Band was penetrated. Overall, because the VIX did not go above 20, and because bonds are moving higher and appear very oversold, and because the SPY is near the 50-day line, it appears the market is ready to go higher. The paramount point that I want to make is this. When you're looking at a sell-off, at a major sell-off, pay attention to the Vix Index. The Vix Index is very, very important because it gives you an instant fear level that we're seeing in the market at this time. And right now we're back within the Bollinger Band and it's moving back towards the 50-day moving average. And I think we're going to go back to neutral level, which is right around 1213, which means the stock market should go higher and the bond market should go higher as well in the short term. This is Roger Scott, and I hope you have a wonderful day. Thank you.